Australia's housing market downturn has worsened, with home values recording their biggest monthly fall in 3.5 years. Our business reporter Lynn is here to explain this to us. Lynn, first, can you take us through this national picture here?
Indeed, Gemma. So these figures today show that the housing market in Australia continues to weaken further. So for the month of June, we saw that house prices fell by 0.4% overall, and that's the biggest monthly fall since December of 2022. The pressure is still amongst the combined capital cities, particularly Sydney and Melbourne, where we've seen the sharpest falls. And if you look at the split there between the combined capital cities and regional Australia, what we're seeing is that the capitals saw a fall of 0.6%, whereas regional Australia continuing to hold up with prices rising by 0.3%.
And on those capitals, I mean, as you said there, Sydney and Melbourne are leading that downturn, but capital cities such as Brisbane and Perth, they're still holding up. What's that divide there?
Yeah, indeed. So we've continued to see this trend in recent months. So if we look at Sydney, for example, in the month of June, house prices fell by 1.2% and in Melbourne by 1%, whereas some of these other capital cities like Perth and Brisbane, though they saw home prices rising or continuing to grow 0.7% and 0.3% respectively. But I think it's important to note that the pace of that growth has slowed significantly, keeping in mind that for some of these cities, we've seen a major run-up. So if you take, for example, Perth, it's been such a standout because from 2021, we've seen that basically that median house price has close to doubled there. Economists say that the divide really comes down to the fact that there is more supply in the two biggest cities. So when we look at cities like Perth or Brisbane, there's just less listings out there, and that is supporting prices because competition is still pretty intense.
Now, what's behind the broader housing market slowdown?
Yeah, indeed. So Cotality make the point that it's not down to one factor, it's a perfect storm of factors. They also say that we started to see that the housing market was weakening even before the Reserve Bank of Australia began to hike interest rates back in February of this year. And that was because buyers were being hampered because of housing affordability challenges. But of course, since then, we have seen that interest rates have risen 3 times. We've also seen that consumer sentiment has virtually collapsed, and that hasn't been helped, of course, because of the war in Iran and the impact that that has had on oil prices as well as other input costs. Add on top of that the property tax changes, so the changes to the capital gains tax discount, as well as negative gearing, which of course is focused on trying to get more first home buyers into the market.
And Lynn, what are the predictions as to where the housing market goes from here?
Most economists, Gemma, believe that the housing market will continue to soften in coming months. Cotality, which of course is the data provider behind these figures today, they believe that we will continue to see this pattern of softening in the months ahead, but we're not going to see a sharp correction. They believe that's because of some of the other factors, such as low housing supply, the fact that we have seen that the labour market is relatively tight, and also because of population growth. I do think that there's a couple of wildcards. One is certainly the Reserve Bank, because although it did hold interest rates steady last month, the governor made crystal clear that the fight against inflation is not over, keeping in mind that core inflation is still rising and it is still well above the Reserve Bank's target band of 2 to 3%. So that's something to watch there. And I think the other thing to watch is investor activity in the property market as well, because we have seen a pullback. A lot of investors sort of in that wait and see mode, but I think economists say, are we going to see perhaps that they might return to the market in the coming months, particularly when we think about new builds, because of course investors still have the benefit of negative gearing as well as the original capital gains tax discount for new builds.